So, with real interest rates heading into negative territory, we're starting to see precious metals move a bit slowly, but surely to the upside. Now, here we're seeing gold at 1803, we're seeing silver at $26. And earlier today, I released a video talking about the global recovery being threatened by the new variants. And that is starting to give some investors pause, having them go into safer plays such as the US 10-year Treasury note, bringing yields down, helping our case, which is once yields come down and inflation is up pretty high, that would benefit gold prices and also even silver prices. But that correlation is a bit tighter with gold. So in this episode, we're going to take a look at that relationship, and we're going to focus a bit more on Europe because remember, my view is one of a global macro perspective. So I like to focus on some of the countries and regions with the largest GDP, US, China, and the Euro area. So first, we're going to take a look, and I'm going to include the UK in that as well. So let's take a look here. Nervousness over new wave stalls UK economic recovery. Data show that activity declined throughout June despite the easing of restrictions. And if you take a look here, we have the United Kingdom, and let me just get this out of the way. It's manufacturing PMI. Remember, I like to look at this because it's a forecast of what's to come in the future. And we're starting to see a bit of a dip here in the UK's manufacturing sector, which it's a pretty strong dip, a pretty healthy dip. So it gives one pause, especially when you tie it to things like this Google mobility data, which shows that retail and recreation is down to negative 17%. Remember, restrictions are beginning to lift a bit. Supermarket and pharmacy activity is down negative 2%. Parks are up, which is good. Public transport, though, is down negative 28%. Workplace is down negative 5%. Residential is up 2%. So things are looking somewhat 2020-ish here in the UK. But let's see what this article has to say about the economic recovery. Because remember, if this really is holding true, then we could expect gold and silver prices to remain somewhat elevated because of the US 10-year getting a bid. Now let's take a look. Consumers visited and spent less in UK shops, bars, and restaurants in June, according to new data suggesting the economic recovery lost momentum following a rise in infections. Now, we have seen that if you take a look at Google's tracking of cases, they have been on an uptick in the UK. So this actually makes a lot of sense, especially when you compare it with the Google mobility data that I just showed you, showing how retail activity is down. As we continue, on Monday, Boris Johnson, Prime Minister, announced that he intends to press ahead with the removal of all the remaining restrictions on July 19th in an attempt to return to normality. But while economists predict the July reopening could deliver another boost to the recovery, they noted that measures of economic activity such as consumers' mobility, bank transactions, and restaurant bookings fell throughout June or stalled despite eased restrictions as the Delta variant continued to spread. Again, what we saw in the ISM data and also the mobility data that I just showed. Let's continue. Most indicators suggest the recovery has paused for breath. And I've said this in past videos that we're starting to reach some toppiness here in the ISM, and there's some correction, room for correction that might be happening. And this is also noted by Gabriella Dickens, economist at UK economist at Pantheon Macroeconomics. She noted that the closely watched market purchasing manager indices, which actually I just showed, funny enough, I highlighted this and I didn't even read through all of this just yet. I'm actually reading this for the first time while doing this video. And she also takes a look at the market purchasing managers indices. But let's continue. Showed an upbeat picture for last month, but that mostly other timely indicators suggest the recovery is losing momentum. The lifting of restrictions, the dropping of mask wearing and social distancing, and the increased awareness of low levels of hospitalization should give the economic rebound new impetus over the summer. But again, here we are looking at Google mobility data for June, show that the number of visits to UK grocery, retail, and recreation hubs has dropped in recent weeks after rising sharply from January's lows as restrictions in the UK have gradually been lifted. Similarly, retail football declined through June to 25% below June 2019 levels, according to the retail consultancy Springboard. Now let's take a look here at this graph that they have on the Financial Times. Visits to UK retail and entertainment hubs have weakened. And this is a comparison between the UK versus France, Germany, and Italy. The UK has dipped pretty mightily. It's the blue line. And the France, Germany, and Italy have actually been on somewhat of an uptick. Now, I'm actually going to show you some data regarding the general Euro area. This is not going to include the UK. And you're going to see over the course of the last couple of months some increase in economic activity within the Euro area. And technically within June, we saw some increase in the Euro area, but it is beginning to slow a tiny bit, very, very tiny bit. And there are some countries that are tied to these new variants that are giving some in the Euro area some pause. But generally, let's look at the good news here. Things are on a slight uptick here with the Euro area manufacturing PMI. If we take a look at this data here, this is actually something that I do on my own. This is my own data, but it comes from the European Commission. And the European Commission every month releases economic data on European countries. And as you can see here, you can take a look at the EU industrial sector. You can basically pretend or take a look at it as if it's somewhat of a manufacturing sector within the Euro area. And over the course from March to April, we had the largest jump from 1.1 to 9.4. From April to May, 9.4 to 10.5, so starting to slow down a bit. And then from May to June, 10.5 to 11.4, so slowed down even a tiny more bit. But if we take a look at this heat map here, let's just move it to all. This heat map shows you all of the major countries regarding European recovery. So here we have Germany as DE. I don't count the UK anymore. France is here, Italy is here, Spain is here. So let's go down and take a look at what we are seeing as far as this heat map is concerned. So over the course of the last couple of months, April and May, well, actually, hold on. I actually haven't done this yet. We are going to take a look at this heat map for June. Guys, this is actually, I'm doing this in real time, so this is going to be pretty interesting to note. So here we are. And generally, things are looking pretty good on this heat map. But things obviously are a little bit uneven with some of these countries. Some of them are gaining. It's becoming, if it's more green, a darker green, that means that they're gaining pretty well. If they're starting to lose some of that steam, like this one, it went from yellow to green back to yellow, then things are a little bit uneven here. And also some countries just haven't fully gone green yet. So, and this one is actually a lighter green than it was before. So some of these countries are struggling. Namely, I took a look at one of these countries, And let's take a look at Spain here. Spain actually is, its economic sentiment indicator is actually not looking too strong. You can see here just slightly that's dipping down, and its services sector is up, its retail is up, but its building is starting to curve. Its construction here is on a decline, and its industrial is definitely on a decline. So what I did was I took a look at what's happening in Spain, just took a look and just took a guess, typed in Spain and the vid here, and lo and behold, there's a spike in cases here. And lo and behold again, Germany to declare Spain a risk area. Germany declares Spain a risk area. Germany lists all of Spain a risk area, according to the ministry. And there are other countries here that are doing relatively well, but there's some that are still struggling. Because Spain is so close to Portugal, I wanted to take a closer look at Portugal to see if it has a similar view. And obviously, it's kind of pointing down a tiny bit, not as aggressively as Spain. Services sector looks good. Retail looks good. Building is coming down pretty aggressively. Construction coming down a bit. Industrial coming down a bit. So obviously, I wanted to look and see what's happening here. And obviously, things are on an uptick here in Portugal. Portugal orders tests, proof at hotel check-in. France tells citizens to avoid Spain, Portugal over spike in Delta variant. France has warned its citizens to avoid Portugal and Spain this summer. So, as I've mentioned before, there are threats to the overall global economy, with some countries getting cases and having them spike again. And there's a threat of having that being passed on to other countries who are doing pretty decently. Now, this, again, is one of the reasons why we may be seeing gold. Oh, look at this. Now, gold is really starting to spike up here at 10 o'clock Eastern time at 1807, and silver is up at $26.07. So we're starting to see some concerns here regarding gold, or regarding the global economic recovery. Some things are starting to slow down, and precious metals are getting a bid because of that. So guys, let me know what you think about all of this in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.